Internationalization of the Indian Rupee, INR. Hello everyone. Today we're diving deep into a powerful shift in the global economic landscape, the internationalization of the Indian Rupee, or INR. India is making bold moves to reduce reliance on the US dollar and position the rupee as a trusted currency for global trade and finance. What does this mean for businesses, investors, and the Indian economy? In this video, we will cover the latest developments in 2025, RBI reforms, global trends, strategic vision, fintech role, and impact outlook. Let's explore. Introduction. Why internationalize the rupee? For decades, the US dollar has dominated global trade, shaping how countries transact internationally. But India is charting a new course, promoting the Indian rupee as a viable global trade currency to reduce forex costs, mitigate dollar dependency, and bolster the economy against external shocks. RBI reforms and key policy shifts. India's central bank, the RBI, has rolled out transformational reforms this year to accelerate this vision. Exporters can now hold foreign currency accounts overseas, allowing direct receipt of export proceeds and smoother payments for imports. Non-residents can open Special Non-Resident Rupee (SNRR) accounts through Indian banks abroad. Usable for both capital and current account transactions. Current account transactions are related to daily trade and services, such as travel, education, and remittances, whereas capital account transactions alter a resident's assets or liabilities abroad, or a non-resident's assets or liabilities in India, including investments, loans, and property. The Special Rupee Vostro Account (SRVA) mechanism, a key channel for foreign banks to hold INR for trade, is now much faster and more flexible. Banks can onboard SRVAs within 24 hours instead of weeks. SRVA account holders, i.e. foreign banks, can invest their surplus balances in Indian government securities and corporate bonds, enhancing liquidity and encouraging more Indian rupee holdings. These reforms boost Indian rupee trade settlements and strengthen India's financial integration globally. Global adoption and strategic moves. India's international partners are warming up to the rupee too. The BRICS-backed New Development Bank plans to issue INR-denominated bonds in India by March 2026, aiming to raise $400 to $500 million. BRICS is a group of major emerging economies that stands for Brazil, Russia, India, China, and South Africa, which has recently expanded to include 5 more member states. This will deepen the Indian bond markets and enhance the rupee's stature. Bilateral trade agreements with countries like Russia, UAE, Indonesia, and the Maldives have enabled INR settlements. Already, 1.34 lakh crore rupees, or about $16 billion worth of trade, is settled in rupees. India is also expanding Indian rupee settlement capabilities to multiple countries across South Asia, the Middle East, and beyond. RBI's strategic vision for INR globalization. The RBI's roadmap to internationalizing the rupee includes several focus areas: promoting INR as an invoicing currency in cross-border trade and financial transactions, deepening offshore markets for the rupee and ensuring seamless integration with domestic markets. Long-term ambition to include INR in the IMF's Special Drawing Rights (SDR) basket, elevating its global standing. Special drawing rights are supplementary foreign exchange reserve assets defined and maintained by the International Monetary Fund. Encouraging bilateral currency swaps and local currency settlement mechanisms to reduce dollar dependency. Infrastructure and fintech role in INR expansion. Infrastructure and innovation underpin this global push. RBI Governor Sanjay Malhotra has advocated expanding currency pair trading beyond just USD-INR and enhancing platforms like forex retail and RBI Retail Direct. The RBI Retail Direct scheme, launched in 2021, is an initiative by the Reserve Bank of India to provide retail investors with a direct online portal to invest in government securities, GSECs, whereas FX Retail is an initiative by RBI to promote fair, transparent, and competitive rates for the customers, where the customers have the option available to them to get the best value in the foreign exchange market. Fintech companies like Modify are democratizing access to rupee-denominated trade finance, especially benefiting SMEs by providing easier cross-border trade solutions. The Indian financial network, Infinite, is being upgraded to support international fund transfers via SRVA, making cross-border rupee transactions smoother and faster. Now my colleague will discuss about the impact and outlook and give her closing remarks.
Thanks! We will discuss about the impact and outlook and what's at stake. The results speak for themselves. INR's share in India's cross-border transactions has grown from just 4% in 2020 to 12% in 2025. If India shifts just 10% of its $800 billion foreign trade to rupee settlements, it could bypass $80 billion worth of dollar transactions, a massive boost to national economic sovereignty. Challenges remain: partial currency convertibility, limited bond market depth, and exchange rate stability are hurdles yet to overcome. However, India is clearly building a parallel trade highway outside the dollar system, setting the stage for a more balanced and resilient global trade architecture. Closing thoughts. To sum up, India's internationalization of the rupee is a strategic game-changer with far-reaching implications. Through bold RBI reforms, global partnerships, and cutting-edge fintech innovation, the INR is emerging as a credible global currency alternative. This journey will not just redefine trade dynamics, but also strengthen India's financial sovereignty on the world stage. If you found this video insightful, please like, share, and subscribe for more updates on trade finance, global economics, and fintech trends. Also, let us know in the comments if you'd like a detailed video or policy briefing on this topic. Thanks for watching!